Okay, boys and girls, we're going to delve into the wonderful world of fibs. Roll the intro. And a warm welcome to one and all. What I'm going to do today is I'm going to kind of carry on from a conversation I was having with the guys in the squad and also try and give you some kind of worth. Now, a lot of you might think this is the magic pill.
Ain't blue pill or red pill? What'll it be, bro?
But is it the blue pill?
You could take the blue pill.
Or the red pill?
Red Pill Brothers.
We're about to find out. But first of all, let's just define what's going on. Well, what's going on in my house is Scruffy's having a coffee. Because we all know Scruffy likes a coffee, and I need it because I'm choking. Now, I never script anything, guys. I just come to camera, I tell you what's in my mind, or a question that's being asked. Now, this wasn't asked, it was a discussion that's been going on for the last few months, believe it or not. And I constantly say a fib is kind of a gateway to the future. Now, you have an echo of the past, which are your key turning points, your levels, etc. And I'll show you these in a moment. Can they tell you what's going to happen tomorrow? Not really.
What?
They're just a roadmap as to where the market may potentially stall. Now, you can then start putting on your indicators. How do they help? Well, again, the lagging. So they can't tell you what's happening tomorrow. And contrary to belief, nobody can.
You're looking confused.
There's one thing that'll get you through this job. One. And it's discipline. I have sets of mantras. The guys know this. I talk to them every day because we have Zoom calls every day, face to face. And it's not always about the charts. And I constantly tell the guys, if you're just looking how to get into the market, you're wasting your time. You've got to manage your time correctly. You've got to have a solid plan. You've got to know how to operate the money side of it. You've got to know where your exit points are to a win or a loss. And you've got to understand the rules of the game. If you think the rules of the game are just a moving average cross and you're going to give your job up in 30 days, you're nothing short of a dickhead.
Sensitive.
And I know I get downvoted. I get downvoted on every single video within seconds. And it's always the same guys. I even put a vote out to see how many videos you want to do a week. And the exact same amount of downvotes said don't do any. Which was amazing, really, because that means the idiots who don't like me watch everything I do. Go figure. But that's the world over. It's how mad this world is. But it's also highlights how fucking stupid the world is.
Oh, here we go.
No. If I don't like something, I don't watch it. If I don't understand something, I learn about it. And if I can't do it, I do something else. This is just common sense. But sadly, that's lacking in the world because we've grown a generation now of fucking morons who want everything now. They don't understand you've got to put the work in. And then you've got the layabouts who live on benefits. And trust me, I've never claimed a thing in my life. I have got zero time for them as well. Why? Because I believe in the system. If you fall down, we pick you up. But if it's a lifestyle choice, you're nothing more than a scumbag and a thief. And you can go fuck right off. And trading will never change your world. I've had a Murray week this week. I get it all the time. The bigger the channel comes, the more these morons come in. And that's where you get your scruffy rant from, because I could internalize it, or I could just be a bit vocal and just say, well, you can say what you like. I'm still going to call you a dickhead, but here's the kicker. I'll still be paid on Friday.
I got paid for this.
Will you? And I prove it. But anyway. That was a Fibonacci arc off on the wrong track, wasn't it? Calm yourself down, boy. Have a cup of coffee. Wink, wink, wink. He's left me today. She's left me on my own because we get in the kitchen done and she doesn't like the noise, so she buggered off.
How does your missus put up with you? Must be my legendary prowess as a lover.
Which is no good, because that means she's run off down to the shops, which means it's going to cost me a fortune.
Big mistake. Big. Huge.
This is aside from the fact that we're going away again tomorrow. We're actually having a scruffy week this week, where I'm going down the country. One of the guys is heading off to far land, so a little salute to you, kid. Meeting up in a nice hotel, this one. We're going to have a nice afternoon, chat about what the world has to offer, what charts are, trading in general, then have a nice meal. And it's a great get together because we're a good community. And it's for that community I'm going to show you this. So, talking about levels, understanding levels. Right, if I pull that out to a daily, you would think this is pretty scary. If I pull this out to a weekly, looks even worse. And then if you take it out to a monthly, holy crap, how the hell do I work that out? Well, you don't, because you're looking at it here on an hourly. Now these levels make perfect sense. You know, stall, 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 stall. I can trade from there to there, safe trade. There to there, safe trades. And they are big, sizable trades. You know, get in here, there's a break point. There is a range of 136 pips. So even if I get in on the close of this candle, that's a 68 pip move in a few hours. All right. In fact, it's 1, 2, within 3 hours, that's 68 pips. Good day trade. Now, if I zoom that in even further, and I look further into this, and I look back into the same sort of moves where I've just been speaking about, which is here, you could get in even earlier by watching 15 minutes. So you've tracked it, you understand what's going on the hour. There's your break. How do I know it's the break? Because it's bust through the two levels, solid gusto. Order on the top of the candle. So if it doesn't pick up, doesn't matter. And then within 3 hours, getting in a bit earlier is 94 pips just by holding a trade. Mightn't get that far, but if you're targeting 50 pips, you would easily get it. Then stop. Right. So these are levels. I like Bollinger Bands. Bollinger Bands show you strength. They show you strength in the market, whether it's compressing. There's a compression. How do I know? Because it's closed in on itself. How do I know strength's in? Because it's flaring out. Simple, basic problems. If it's compressed, I know there's a big move coming. Whop, big move. Compression, big move. And it kept on going. Boom, boom, boom. Compression, big move. Happens over and over. But we're talking about fibs. So, let me get rid of all of this lot because I'm going to be redoing this and going to scratch. I want to basically show you the ratios of a market. So, we have just been through non-farm payroll. Now, non-farm payroll was an explosion of a move, okay? And it was here, all right? Now, if I push this out onto the owl, you'd be able to see it a bit cleaner. So, this candle here represented the non-farm payroll explosion. Straight up, and you think, oh, shit. How on earth can I work that out? Well, you could have done by looking at a fib, and then you can look inside a fib. So what I'm going to do is I'm going to put the smaller fib on first. So forget this side just for now, and we're going to come on to that. That is the move that we are looking to predict. Now, running up to it, is there anything that can help? Well, there is. What was the last move? Bear in mind, hourly chart. Pay close attention to that. What was the last move running up to it? Well, I can see the top, which is here. How do I know it's the top? Well, it didn't get any higher. And it didn't get any higher for 1, 2, 3, 4, 5, 6. So you had 6 hours to work this out. Where did that trade come from? This move? Well, it started here. How do I know? Well, it's green. It's the first candle of a major move moving up. Is there been any low? Well, what we do is we frame it out. So there's your low point. Has that been breached? No. Where's my high point? Well, my high point is there. Okay. Has that been breached? No. How do I lock the 2 points together? How do I know that is the locker? Well, it's very easy. Take a fib tool from your 2 fixed points that you recognize. Now I've had 1, 2, 3, 4 hours to sit and look that it hasn't broken. Long time. It broke this area. This. 23.6. So this zone now becomes an area of attraction. Why is it called an area of attraction? Because things can happen here. I'm going to turn it red because it's also quite a dangerous zone. You don't want to be doing anything inside. It's a bit bright, isn't it? I'll make it like a maroon colour then, so it's not as brutal. There we go. Right. So if I'm looking for this and I'm looking for retracements, I need to see it break to the underside. Well, if it breaks to the underside, there are 3 key points that are decent targets to be aware of. 1, 2, 3. Okay. Now there's also another area under here. Now if I duplicate that and pull it, it's identical. So you now have what's called a trading arena based with a fib. So what we're doing is you're working this bit here. Now the general mantra of this market, if we look at it and we look at a narrative and we look at a big picture narrative, that's pushing up. Until it tells you otherwise, it's been pushing up. Go to weekly, it's pushing up. So if you are going to go into that arena, just pull this back to the hourly and make this a bit bigger and pop that back. Just do this. So if I'm coming into this arena, I am counter trending. So I have to be careful. How can I be careful? Well, it's very simple. You have rules. Guys in the squad know my rules. And it's not something that I'm just bringing up right now. I've spoke about this for years. And I preached with the guys years. 23 gets in, 38 is risk-free, 50 is a key target, and 61 is a running target. So, counter trend, what's the safe thing to do? You make certain you are risk-free at 38. Why? Because it's a key bounce point. Price moved up. What happened? It broke, slammed straight down onto that 38. Okay? You would have been risk-free. But you can say, but it was non-farm payroll. It ran away. Okay? My next mantra is, if in doubt, stay out. I don't know what's going to happen with this market. I genuinely don't. You can only work what's happening. But if I was so set to trade this, well, I can also have a roadmap as to where the next key turning points are. So if I'm brave, I can hold it all the way up to here. 127.2 is a key turning point of fib. It's stopped dead. So you could have had your trade up here to come back into range. Or you could even have your stops up here. I have aggressive stops because I stage into trades. And as you can see on my Fibonacci tool, it tells me where my stops are. So my outer range would be up here. So come up, turning point, add some more in, comes back, and I'm out. Counter trend. Okay. So what else can we see here? Look at the makeup of this particular fib. Key turning point, down, stalled on the 0 again, shot straight back, stopped dead on that 38. Again, rattled up. When it plummeted, and it did, came down, stalled at the base, because obviously it'd be support and resistance here because of the swing, but then it stopped dead again on the 127 the other side because it's a key turning point, and the next key turning point is 161, all tied together. Right. That's one fib, just one, and it's highlighting all of this. So this tiny piece of information has given you a lot to work with. You've got entries in and out, entries in and out, entry in and out. Wait for it to come back, out. Want a runner, keep on going into these. The fib has done all of this for you. Now let's take this back. Just crunch this up a little bit, just like so. We can see another move inside a move. So came here, kind of collapsed, started here, again, it never looked back from this point till it got up to this point here. So how do I know it's this one? Well, it's very simple, because it started there, it's collapsed right the way through a 50%, which would wipe that out. So let me show you that. So from there to there, that's a trade within a trade. We often talk about 50%. Again, didn't break, came down, stalled on the 23s, right down 38 risk-free, hit my target, closing the fib off. Job's done. That particular fib is now complete. Right. Look for a new fib. Started there. Got up as high as this one. Why do I know that? Because it hasn't breached the 50% at any time running up. So came through, boom, 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 back down. There's your 23 for your key point. And what are we looking for? We're looking for key areas of attraction. So let me pull this across. I'm going to take this other fib off because I can see the lines are already on it. Take that off. And then I'll move this fib over just so you can kind of see it. Now what's it doing? Well, it's telling you a big framework now, you know, because this was the locking point. Why? Because we drew the other fib in. What happened here? If you were locked in at that point and you're running into this moving average, well, again, there's your 23, 38, stall, on the pip, 61.8. Wow. Okay. Now there's an argument to say, well, I've just seen non-farms pushed all the way up the top. Right. Oops, sorry. Might have to draw the fib in again. Hold on. Just unselect all of that. Get that. There we go. Now it found a high here. And then it slammed through 23. Locked it in. Now look at the dynamic. How it's changed. The 38 come into play, stalled, bang on it, ran to the 50%, which I've just been talking about down here. Stop, 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 stop. Tail down to 61, failed, came back to range, and look where it stopped. Bang on it. Fibs are incredibly powerful. And if you know how to draw them on a high time frame, so you draw them on your dailies, get an understanding of what that fibs do. You see me do it all the time when I'm trading. Now, superimpose that down onto an hourly chart. Then look for a drive inside the hourly chart. And yes, Fossil, I'm talking to you. Little salute to you. Beers is on you tomorrow, by the way. Nah, it's all right. I'll buy them. Superimpose it onto the hourly. Look for the last drive in relation to the current price you're looking at. And then you've suddenly got this brilliant framework. And not only is it a good framework, it's mathematically tested. And it's mathematically tested through history. You can go back to the rice traders and you'll find Fibonacci works. You can look at a petal and Fibonacci has a golden ratio number within it. Look at a seashell. It's the same ratio as the Milky Way. Why? Because the ratio of numbers. And what's a chart? It's just a series of numbers. So ratios will naturally take over. Now, you are going to have those that argue with me, which is fine. We all trade in our different ways. I find this is the one thing that has been consistent in 2 decades. 2 decades of doing this. And I started working as a full-time trader for myself when my factory closed 2017. And you've seen that journey over the course of the years. And started small, now I'm doing okay. You know, in fact, I'm doing better than okay. And it's because of fibs. So I put my levels in. I'm paying very close attention to my levels. I wrap zones around those levels, superimpose a fib, and then the only thing I've got to worry about is what direction I'm going in. And then I'm just going to buy or sell those levels into the next one when I'm intraday trading. When I'm swing trading, I can actually look at it on a similar process, but I just scale up. I look at it daily, and that's where I'm working, and my entry points are based on a 4-hour. Very, very simple processes. But to get your head around it, you've got to understand it, you've got to be shown it, and you've got to understand the principles. But the principles are very simple. Definitive top, definitive bottom. Lock in at 23 for an entry, make certain your risk's 3 at 38, 50 is your target. If you go on the other way, look for a break and a retest of the 23 to get yourself going. Then you're looking for it to break the 0 and your target is the 127. Or in the case of this, when it becomes volatile market, you draw your fib in and you see where it goes to the turning point and you start buying or selling at the 127. Simple process. Trading ain't that hard if you plan it out. But if you think that it's just a case of show me a magic indicator because I've seen it, I get the adverts every day. They do my nana in. There's one at the minute, it's like a young blonde kid, and he's always there, oh yeah, you've worked with me a week, what's your profit? And then it flashes up saying, oh, I've got 200% growth. What a load of bollocks. What a dickhead. You know, I mean, the kid's there in a bloody private jet and a Rolls Royce. This might come as a shocker to you, kids. You can rent these things for a couple £100.
No way!
I can rent an airplane for 400 an afternoon. There's an airline, there's a bloody private airfield down the road. And the guy, you give them £400 for a couple of hours to sit in that plane. Not take off, just sit in it. They'll take it. You know, in fact, if you get to know them, probably do for £100. So don't get sucked in with all of these things. If you're doing 6 or 7% consistently every month, and you started small but were looking at a 5-year horizon, you'd be pretty much retired. Why? Because the compound gains would be huge. And this is the thing when you see these adverts. The growth is unsustainable. It can't be done. In fact, let me just quickly show you something. Bear with me. I'll just pause while I log in.
Well, we're waiting.
Okay, so I've just logged in because I don't want to show you my login details and private details of accounts, etc. I'm looking to grow my trading pot. Now there's my trading pot here. It's 87,748. Slow, steady growth on a long-term horizon. Now I use small accounts, investment accounts, and any surplus money goes into here. Now I set something away in March because you lot wanted to see the Darwin and understand Darwin. I want to understand it myself, so I set some swing trades up. But look at this. This does not make money all the time. In fact, it's losing money because it was getting into a point where the markets are incredibly high. So I've got to be careful. Now, if I had 10, 20% per month all the time, what's saying, this would be millions by now. It's a couple of years old. You know, I moved everything into this a year ago. Where we are. There's the performance over the year. I cashed other investments out and put them in here. And there we go. So August, it's taken a bit of a thump. But look at the month. So you can't win every month if you're looking at long term. But overall, my cumulative returns, they've never really lost from when I put it in. So I'm really happy with this, and it's growing. Now I'll take it back to the investments, and then I'll show you something on sort of the trading tracker for a swing trade. I've just sold out most of this, and you can see it in cash, and that cash is going to go into here and into the emerging markets. The emerging markets for me is a 10-year horizon, and this one will be there till, well, when I'm 65, so it'll be like 10, 15 years as well. Okay, it's growing every month. I'm really happy, right? This I'm going to dollar cost average in, knowing I'm going to lose money. But what it means is every time I buy into it, I get a cheaper index and a cheaper index and a cheaper index. And then when it starts to rise again, because these funds over time do look to rise, those dollar cost averagings will pay off. So how does that work? Well, let me show you something, and we'll figure it out. Now here is something I set away in March. I'm not looking to reinvent the wheel. I'm not looking to make massive grows. I just want to do 0.5%, maybe 1% every month and a little bit over and keep it going. My annualized return on this is 17.16, which is far better than any bank will ever give me. The money that I get from this will go across. I'm not bothered about my drawdown as long as I keep it in control. You know, so my max drawdown at the moment is 8.21. But what you got to remember is that's cumulative. It's across the board. And my Sharpe ratio, 1.05. As long as I keep it above 1, everything's fine. I'm not really worried. So when I look at this, people go, it's bollocks, it's bollocks, it's bollocks. It's not. You know, I've already outperformed the bank. And what you got to remember with a Darwin format like that, if I'm making 1% on the Darwin, the Signal account might actually be running at about 10%. So go figure. You know, the devil is in the detail, and the detail is where you get paid. And that's what the Vanguard is. I could have that with massive returns, still make fuck all because I might lose it all. But if I'm consistent and I'm steady, which I am pretty consistent with what I do. At the end of the year, I'm what's called net positive. And how? Circle it all the way back to showing that fib. Because I plan it. Plan everything I do. I plan my time, plan the products I'm going to trade, I plan where I'm going to get in, where I'm going to get out, and I ask myself 2 questions, but mainly one. But 2 questions. Is it worth it? In other words, is the trade ready to go, yes or no? And if it's a yes, I ask the single most important question I can ask. Can I afford it? And if I say yes, away we go. And if I'm wrong, well, I've already agreed to the trade because I said I could afford it. Keeps me calm. Keeps me composed. And that way, I make money. So I hope that helps. Just a little chat on a Saturday morning. And I thought I'd try and give you something to think about. If you want to try Darwin, do check that out. It is a very good platform. Kind of keep your sort of tickers and everything to yourself, but show your stats. That's kind of the way I look at it. That way it stops anybody sort of having a pop at you if they start investing in you. Invest in the ticker, not the person. That's the byword. You know, because I've spoken to a few people that have... They have somebody invest in them. The index goes down for maybe a month, and then they get dodgy phone calls and emails. Don't want any of that. But if you're going to be public, still show your figures. That's kind of the way I look at it anyway. Hope that makes sense of thoughts. It's all to do with privacy. Anyway, so as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.